Coming up in today's episode, Coinbase plunges 21% after the SEC opens a lawsuit against it. Binance customers pull almost $800 million from the exchange in 24 hours. Bill Gates invests $1 billion into Heineken shares. The media loves Apple stock after they released their new VR headset. Volatility hits the lowest level in over 3 years since before COVID. Small caps move significantly higher versus large caps. And regional banks have a big day as well. Welcome back to Click Capital, everybody. My name's Jared, and I'll be taking you through all the most important news, data, and charts from the markets today. And just a quick look at the heat map here, we can see the banks really outperformed today. We got a bit of a rebound back in the semis. Industrials and cyclicals did okay, with healthcare coming off along with consumer defensive and utilities. Not much out in the economic data today, with just crude oil stocks falling a little bit worse than expected. The market's still given a 78% chance that the Fed will keep rates on hold. The fear and greed index ticked up again. We're almost in the extreme greed zone. Another busy day in the options market with 42 million contracts changing hands. And a huge 61% of them calls. That's the highest reading we've seen in a long time. So this market is just getting absolutely carried away on the call options. And once again, in the big companies like Tesla, 38% puts, NVDA 40%, and Apple 37%. So a lot of people loading into the calls after Apple's new release. However, we're not seeing the same optimism with dark pool buys, with the DIX index actually falling today to 47%. Corporate insiders taking advantage of these elevated levels as well, selling as much stock as they have in the last couple of months, with sales outpacing purchases almost 3 to 1. And once again, our new SP500 oscillator indicator now in overbought levels just above 60, indicating that the market may be running out of steam here at these elevated levels. And if you've been watching my channel, you knew I got short Coinbase last week at $62 a share. I promise I did not have any inside information. If you've been watching, you know I've been saying for a while that the US government and regulators is unofficially going after the crypto industry in the States. They want to shut it down, so we saw the news come out that they'll open a lawsuit against Binance. They've done the same thing today, accusing Coinbase of operating an unregistered exchange. And so basically the government could be paving the way for a central bank digital currency, and to do that they need to get these guys out of the way first. And some analysts are saying that Coinbase could take a revenue hit of more than 30% as it faces charges from the SEC. However, I think this thing is toast in the long run. It's structurally broken. I mean, how do you grow a business yet even survive when you've got the government trying to shut you down? That to me seems like it's almost impossible. And the government's not going to let up, especially when we see the SEC asking for emergency order to freeze Binance US assets anywhere in the world. So it's no wonder Binance customers pulled out almost $800 million from the exchange in the 24 hours after it was sued by the SEC. I mean, if I had any funds with these exchanges, which I don't because I don't trade crypto, I would be very nervous and would be pulling my money out as well. And just a quick look at Coinbase on the chart. Funny enough, the dip was actually bought here today. We still ended down 12% at $51.60 a share. And I'm still short the stock, as I believe it could still have a lot further to go. And global health proponent Bill Gates makes $1 billion bet into Heineken, beer company which is a competitor of Budweiser, whose stock has been going down the toilet lately after they partnered with a transgender influencer on social media. And here's a quick look at the chart of Heineken, which trades on the Amsterdam Stock Exchange. And according to our stock fair value indicator, it is undervalued by 40%. And Heineken's a favourite beer of mine as well. So this looks to be potentially a good long-term investment. We've got another billionaire hedge fund manager sounding the alarms. This time it's Paul Singer. And he said the US economy is facing an extraordinarily dangerous and confusing period. He goes on to say that valuations are still very high, a significant chance of recession, and he sees the possibility of a lengthy period of low returns in financial assets. And I too share those views along with him. We're still yet to see how the liquidity drain from the new Treasury bill issuance is going to affect the markets. Some estimates they're going to have to issue up to $1 trillion in new bonds for the remainder of the year. And historically, equity markets don't really like those poor liquidity conditions resulting from debt ceiling deals. And of course, Wall Street and the media is jumping on the hype surrounding the new mixed reality headset Vision Pro from Apple, saying the stock could be a table pounder. And even though the stock is up 50% in the last 6 months, without a big pullback, it could keep going higher. Now, if you watched yesterday's video, you know I made a case that why I think Apple may have topped out here. We're in this big resistance zone, and just looking at the daily chart, we did this big bearish engulfing candle. Actually found lower highs, lower lows today, but we really need to see a close underneath a 50-bar VWAP to confirm that. And don't forget, we had a bunch of Apple corporate insiders offloading stock in early April, including CEO Tim Cook, who offloaded almost $9.5 million worth of shares. Wouldn't be surprised to see some more insider sales come in over the next couple of days or weeks. Dark pool traders are also short the stock to the tune of $5.5 billion. Okay, back over to the charts. S&P 500 is basically flat today, up just a little bit. The NASDAQ was pretty much flat, still coiling up at the top of this range, but the big move today was in the small caps. The Russell up 2.6% on huge volume, and micro caps up 3%, breaking out to new multi-month highs. And you heard me say on Friday, looking at the spread of the Russell versus the SP500 here, we had this really good move up on Friday on volume, then we pulled back yesterday and then just had an absolute ripper of a move here today. And it looks to put in some really good price action that we may have bottomed here. And remember, we've had small caps underperforming large caps for quite some time now. So I continue to believe this could be a good play going forward, long small caps, short big caps, as we do have a big technical and fundamental spread between the two. Mixed price action in the international stock indices with the TSX, FTSE and the DAX kind of hanging in there. The Nikkei is still really elevated up here, and the Aussie and the China are a bit more weaker. And once again, we've just had volatility dive right up the front here. The VIX 9-day to 13.8 and the VIX 30-day to 13.9. And just taking you out to a monthly chart on the VIX, we haven't seen that level since before COVID started back in February 2020. And so volatility is very low down here. You'd have to imagine it couldn't get much lower. We've actually got the CPI report coming out on next Tuesday, then the Fed meeting results on the Wednesday. And even though we've got a really low VIX, which measures at the money options, price of out of the money puts is actually still elevated. We can see that in the SKU index at 146. So the implied volatility across the option market is really skewed high towards tail risk here. And the last time we saw these levels on the SKU index was in late 2021, just before the market dived off. So the cost to ensure this market is growing, and we can see in the put call ratios that not many people are buying puts at all. So if and when the market does correct or crash, people are going to be paying through the nose for those put options. Breadth continues to hold its ground with 65% of stocks above the 20-day average, and we had been really depressed here the last couple of weeks, even though we got the indices at highs. So a lot of stocks have been playing catch up, and we can see that in the Russell 2000. But still only half of stocks above their long-term average. And a bit of a pickup in stocks making new highs with 90 on the big board and 92 stocks on the NASDAQ making new highs today. We didn't see those numbers since back in early Feb, the last time the market had a bit of a swing high top. Growth versus defensive sector spread still hanging in there really high. And we got a big move up in high beta stocks here today. And the biggest down move we've seen in the NASDAQ versus Russell spread in quite some time. We've got bond yields holding up there with a 2-year at 450, and we've got high yield bonds just sitting above their 50-day. Bitcoin shrugged off that news from the SEC going after Coinbase. Actually finished the day up 5% back around yesterday's highs. We've got commodities hanging in there at that big support zone. Nice move up in the clean energy sector here today. Been watching my channel, you heard me say a week and a half ago I added to this position in my long-term portfolio. And out of all the stock sectors that I cover here, this one, the Clean Energy Fund PBW, actually has the highest dividend yield at 4.78%. And so I'm a long-term holder in this fund. Out of all the growth and high beta stuff, the tech fund was actually the only one to stumble here today. And semis as well, still consolidating up here. Pretty good bounce back in the retail stuff after being pretty beaten down the last couple of weeks, closed above the 50. And look at that, home builders breaking out to new year-to-date highs and completely define higher rates and record low new mortgage applications. The banks look to have potentially bottomed out here, and we had a huge move up in the regionals today, up almost 5%. And those who watch the channel remember back on the 11th of May, I specifically highlighted 10 banks that were trading below their liquidation values, and we've significantly rallied off those lows and had some pretty big moves up in these names here today. It appears we've got some big money going into these cheap banks. So they look like they have potentially put in a bottom. And we've got defense stocks closing back above their 50 for the first time in a few weeks. REITs are still trading soft, and the defensive sectors came off once again today with healthcare, staples, and utilities all finishing a little bit lower. The largest asset manager in the world, the BlackRock Barometer as I call it, continuing to hold up. Tesla's trading really strong here, finding new year-to-date highs again today. Do think we are a little bit stretched up here, over 40 points above the 50-day VWAP. NVDA came off 1.3% with volatility and volume continuing to dry up. Microsoft shares look to have softly rejected this big resistance zone, and Google found new year-to-date highs. Nice bounce back in AMD and a little bit of bounces in the meme stock space. You can see that in GameStop, C3 AI, and SoFi Tech as well. But typically the price action in meme stocks is a great contrarian indicator for not only themselves but the market as a whole. Carl Icahn's stock hanging in there, and good moves up in Bank of America, Citigroup, Wells, and Schwab hanging in there too. Okay, back to the main indices to wrap it up. And once again, I continue to like the risk reward on staying tilted net short here, so I'm keeping the portfolio 60% net short. We continue to have a lot of divergences in the market. We've got a lot of overbought readings out there. We do have that interesting dynamic of the small caps playing catch up, and that's great if you're positioned similar to I am, because the long side of my portfolio is in small caps value stuff, and I continue to remain short some tech as it's really elevated. So even though I'm net short and the market overall moved up today, I still had a good day as I'm positioned well with how the market's currently evolving. And they've also got the risk of the liquidity drain coming from the new treasury issuance. So I can imagine that would have some downward pressure on the market in the coming weeks and months. And that's all I got for you today. Thanks very much for tuning in. Appreciate all you guys that hit the like button, and I'll see you again tomorrow afternoon.